The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, the first day of October in the market trade started with more red on the screen, but by the end of the session, we saw a real nice turnaround in the grains and oilseeds with double-digit gains in soybeans at the close. Mixed day in the livestock sector, but all in all, not a bad way to start the new month. Obviously, a lot of headlines and news items out there that we need to pay attention to and talk about. Let's dive in. Joining us here for today's program, brought to you by John Deere Operations Center, Mike Zuzolo with Global Commodity Analytics. Mike, good to talk with you, sir. Happy October. I don't know where September went, but here we are into the fourth quarter of the year, Mike.
As the radio stations back in the 80s used to say, happy Rocktober. So we found Rocktober in the soybeans on Wednesday, Jesse.
We did. And I'm curious, let's start there because, you know, it was red to start the session Wednesday. We had all the USDA numbers on Tuesday. We'll get into that in a minute, but here's soybeans with a double-digit rally to start the month of October. Now, I'm going to pull up a headline here. I'm wondering if this maybe had something to do with it. Talk that President Trump and Chinese President Xi are going to be meeting here in about a month.
Yeah, I think this really was a necessary key piece of the turnaround and new weekly highs after going down and hitting 7-week lows in the soybean futures on Wednesday's trade. I was talking to a colleague of yours Wednesday morning before the opening, and he said, what is going to turn this market around? I said, well, I see three things as most likely: global supply and higher prices, mainly in the wheat and the corn. That may take a while. The trade prices in a shrinking crop here in the United States. That may take another couple weeks. Or we get some news about U.S.-China trade deal opening up. And I think that was what happened on Wednesday. The question is now, Jesse, does this have legs? And I was glad to see that the soybean oil and the vegetable oil market in general, even with the still very weakened crude oil market because of the Mideast peace proposal that President Trump has put forth, has weakened that energy and crude oil market in particular. Veg oils are standing up pretty decently right now. And I think that's a real necessary piece of the puzzle. I would also say that one of the things that I really am looking at as we get to next week's trade especially is what's going on in the Black Sea. We're seeing Russian wheat prices at 1-month highs pretty consistently this week. We're now starting to hear about some amazing flooding in Odessa, Ukraine, and we're already started to see, before this flooding news hit, ideas that the Ukrainian farmers are not getting the corn out. In fact, they're exports as of October 1st down about 27% in wheat, down over 300% versus last year in the same time period for the marketing year in the corn. So that's something I think that goes back to that global supply, global price issue, maybe will come in and help support this market. But we've raised the stakes for a higher weekly close now that we've gotten this news on Wednesday and reverse thrusters in those soybean prices.
Well, let's dive a little bit more into the world soybean picture. Let's take a look at this chart. And, you know, this whole situation, I mean, the Argentina news that we got last week that was quite baffling to me. There's the leaked pictures of text messages on Scott Bessent's phone, seemingly from Ag Secretary Rollins, talking about how China capitalized on Argentina getting rid of its export taxes and buying a bunch of soybeans, and the compounding issue of Trump's tariffs and more. There's so much going on here. So when you look at some of these charts and look at soybeans from a world price perspective, what stands out to you, Mike?
Yeah, I used to work at a grocery store in high school, Jesse, and we always knew when some guy put down the broom the wrong way because he'd knock over a huge jar of pickles and it'd smell up the whole store. It reminded me of what's going on with the USDA, Secretary of Treasury, and I think that's why, in relation to Argentina, it's like clean up on aisle 9, and I think that's where President Trump's Truth Social post on Wednesday came from. He's really trying to do some cleanup here. But be that as it may, the September stocks report was surprisingly friendly for the soybeans. They took about 15 million bushels off the table versus what the trade was thinking and off of what we got in terms of the WASDE report in September. And so you can go down to about a 285, 286 carryover for 25-26 now on this upcoming WASDE report for beans if you don't change any supply demand numbers. That's a big if, because USDA could still very much monkey around with crush and especially monkey around with exports if we get a report. But this is where it goes back to lack of transparency, lack of being able to see the data. If the government shutdown keeps going on, this chart becomes more and more handy, I think, as Trump gets ready to meet Xi at the end of October. And that's the thing about this whole thing about the Truth Social post. It's great he mentioned soybeans and China negotiating with them and hurting the U.S. farmer, but they don't meet till the end of October. So what does the trade after this headline news? And that's where some of these other factors, I think, really need to come in and help support this. I'd still say at the end of the day, even looking at this chart, even looking at Paranagua soybean prices at near $12, and Argentina is more competitive, only about 30 cents away from us, I'd still say we need extra support in this bean market, mainly because the Chinese are also seeing big price reductions in their hog market. Their hog futures at the Dalian exchange hit a fresh 3-year low this week, and they continue to liquidate. And it suggests they don't need 112 million tons of soybeans this marketing year of 25-26 like USDA has us at. They really only will need about 106. That's what China's government is telling us. That's a big drop compared to the business we're not getting right now. So I'm excited about Wednesday's turnaround. I hope it has legs, and I hope this chart starts to really make sense in terms of how the Chinese look at buying as we get into November, especially.
Well, and I want to look at the November soybean seasonal as well with you. And let's talk about this chart a bit. And, November beans, we dipped below that psychological $10 mark on the board, but getting the rally to close above that on Wednesday, I was happy to see that. When you look specifically at Nov beans and some of the seasonal activity here, what are you going to be paying attention to this month, Mike?
Well, this chart becomes more important because of the stocks report and because of the lack of Chinese buying. I mean, on-farm soybean holdings from producers for soybeans down 18% from last year. In corn, it was down 18% from last year. So the producer doesn't have a lot of corn or beans. And in fact, the off-farm commercial storage of beans is only down about 2.7% from last year. So clearly the on-farm did a good job getting rid of it. The off-farm commercial is the one getting stuck with it. That makes sense given our bad basis. That's why I'm looking at 2018 still, is because we really aren't out of the woods yet. And we can see we've separated from the 2024 price action. Instead of going higher into the end of September, we went sideways and then lower after the grain stocks report. We made a high right around this time last year in the 1st of October at around 1070, 1065 area. That's what I was hoping we would get to be able to get some more beans offloaded, both new crop and 25-26, and pedal out some more 26-27 as it would have gotten closer to $11. So I'm still watching this 2018 market. We're not out of the woods yet, is what this chart would suggest to me, Jesse.
Well, I think overall in this soybean complex, it's going to be an interesting month here, Mike, until we get to that presumed meeting between Trump and Xi, and just a lot of factors are going to have to be watched closely. And I know this much: when the mainstream media is talking about soybeans left and right, you know that the situation here in the U.S., it's a tough situation when you get to that point, Mike.
I couldn't agree more. And I think it goes back to what we've talked about pretty much all year long. the stocks report really did damage to the wheat-led recovery. I'm hoping, though, we can get over that because global prices and global supplies are a lot tighter. But soybeans can only go it alone for a little bit of time. They need the wheat and the corn, and we've seen that over and over and over again. I don't see that changing anytime soon until we finally get into the last 50% of harvest. If we really are lower on yields here in the States, that will matter. But I can tell you right now, it's early, but I continue to hear, Jesse, on both sides of the Mississippi, on the Corn Belt, the producers are much more disappointed with their corn versus last year than their soybeans. Some of them, I won't say many, but some of them are actually surprised at how good their beans have held up as they've gotten into pretty much being done in some areas. I have clients in Indiana that will be wrapping up by this weekend on soybeans.
Mike Zuzolo with Global Commodity Analytics joining us here today for market analysis on Market Talk, brought to you by John Deere Operations Center. Let's talk about this corn market a bit, Mike, as we got those new updates from USDA on Tuesday with the grain stocks report. And let's talk about this overall U.S. corn balance sheet. When you looked through the numbers on the corn side, what stood out to you the most from Tuesday's report?
The thing that stands out to me the most, and this is probably the most important part of today's presentation, I would say, and conversation, Jesse, is the residual number. That is feed and residual. So USDA took production for 2024 up 25 million. They also took residual down 182 million. Those two combined added 207 million bushels to the ending stocks. And now we're going to come in with an October report on WASDE of a 24-25 carryover of 1.532. That residual decline or loss in demand, I call ghost bushels. And the reason I call that is because feed and residual really isn't feed and residual. It is a catch-all in this supply demand and how the USDA figures supply demand for the corn market.
Well, and looking at, let's talk about a corn export chart here as well as we tie in and talk about this feed and residual here, and explain to us what you see when, we continue to see these headlines of record corn exports, Mike.
Yeah, I came in with an estimate on the corn stocks at right about 1.4 billion. I felt like I was a little bit high when I put that, but I also realized this is how USDA tends to do things. And so I came in at 1.4. I was not surprised, would not have been surprised at a 1.4 or a little higher. But this 1.532 is a shocker to me. Why? Because U.S. corn exports, USDA said themselves just about 10 days ago, hit another new record in 24-25. And that's what this September stocks report reflected, was 24-25 bushels for the most part. And you can argue back and forth, well, we probably got some 25 bushels that snuck in there as well. I would say that really isn't material this year because the export was so strong, and they're looking at another big, even bigger increase in 25-26. So to me, it's very hard to cut demand back in the corn side of the equation unless you do feed and residual. And I think it's worth understanding what feed and residual actually means and why I call those ghost bushels. Those 182 million bushels mean nothing when it comes to the actual supply demand.
Yeah, very true. Well, and feed and residual, looking at this a little bit more, this was an interesting article you sent me for the show today from the Economic Research Service. What are you inferring from this article, Mike?
Well, they talked about this back in 2012 during the drought year, and this is when I really learned and got educated on what feed and residual really means, because many people were getting more and more bullish as we got into August, September on the crop reports, ahead of the crop reports as we got into the fall. And I was like, well, hold on. I just saw this in August of 2012 and said, wait a minute, what's this mean when they say feed and residual, quote unquote, account is an accounting category which is used to balance corn supply and demand. Feed and residual use is equal to the total supply minus all other non-feed and residual uses minus ending stocks. And so it literally is a catch-all on the supply-demand fundamentals. And it does have feed in there, but you don't know which feed it is because it's feed and residual. And I know that many of us have gone to the stats meetings, to USDA stats meetings in the fall, and I've asked them split out the feed and split out the residual so we can track the livestock demand properly and get a better idea of the supply-demand fundamentals. And so when I talk about ghost bushels, and I tell you it's not really supply demand balance sheet numbers, I want to be very accurate and correct and represent USDA well in terms of how they look at this line item. So when they take the 182 million bushels off the table and essentially say we don't have razor thin old crop corn stocks, I don't think that's quite true because of the way they calculate it.
Well, I know we're going to use this to segue into the livestock part of our conversation in a minute, but I want to talk about the weekly corn continuation chart as well. Just as we start the new month of October and as we kind of bookend this conversation about what you're seeing on the corn balance sheets right now, what's the big thing you're going to be watching here for corn as we close out the week and also get into the month of October, Mike?
Yeah, the big thing right now is we did not fill the gap down around 405, 406 left over from when September futures went off the board, Jesse. And you can see that it really sticks out. In the last 3 weeks now, we have tried to fill that more and more, getting down to 411, 412. I'd really like to just fill that gap and be done with it, and then be able to maybe go up to where the dotted wedge point is, up around 448, 449. That seems to me, if I'm right about us only having really a 1.3 or 1.4 carryover and tighter corn supplies because the new crop harvest is going to be a little bit lower, it would make sense to me if the wheat didn't fight us that we could get back up to that level. But clearly we're playing the defense now, and you notice that with the channel. We went outside the blue channel to the upside, and it reined it back in. Now we're dancing on the support line of the channel. Maybe we're going to define a whole nother channel to the upside, or uptrend channel at this stage, but it's a very messy chart. The number one key is fill the gap, but don't go any lower than that. So a close back below $4, that is a huge alarm bell to me from a technician standpoint because of what this chart suggests right now.
Well, thinking about feed, let's go over and talk about feeder cattle. We had a heck of a day in feeder futures Wednesday, Mike. We were higher for a time, ended up finishing triple-digit losses in the front months here. It was a mixed day in fat cattle as well, lower in hogs. So when we take a look at this cattle complex and starting with this feeder cattle trade specifically, what stands out to you as we start the new month?
I tell you, I love this October feeder chart because it represents so well how powerful the feeder corn spreading and the ratio is with the funds. You know, they've cut about half of their massive record net long position in feeder cattle futures and options over the course of the last month or so, Jesse. And so they're pretty cleaned up. So the question is, do they want to pick those longs back up again because the corn market is breaking? And we saw it on Tuesday after the report came out. The feeders were down pretty hard with the corn staying strong. And then the report came out and it was a complete flip and reversal of both of those commodities. It tells us that, number one, it's the fourth quarter now. The cash market has got to hold together here because the funds are not blindly buying the feeders anymore. And that's partly because the yearling sales are starting. We're going to have some feeder stocker calves come into this market. And the market isn't sure whether the rancher and the cow-calf people and the feedlots are really going to bid up at this point, whether they have the guts to go after those high prices, you know, for the past several months, or whether they're betting on a pullback. And so this chart would suggest to me we've lost our strong uptrend that was drawn off the May-June lows in purple. We've gone sideways. We're trying to establish a trend again. We're overall still an uptrend, but it's starting to look more sideways. What we don't want to see is kind of a rolling over type look. That long orange trend line is a great line in the sand psychologically to not go lower. You and I have talked about this a lot. We've had hogs on our side. I think the hogs are giving way now, and that's part of the reason why the feeders and the fats have had more two-sided trade. Cash market's uncertain. Wall Street made new record highs on Wednesday, so it's solid. The dollar is more uncertain because of the shutdown. So we've got more headwinds than we've had in the past. Watch these technicals. Be ready for a 15 to 20% correction.
Well, and I'll throw in the fat cattle as well here. Just think about the complex as a whole. I know October can tend to bring us some seasonality in these markets, but I wonder with where we're at in these price levels if we might have to throw some of that traditional seasonality out the window in cattle, Mike.
I think we do. I mean, you can't get around the fact that we've cut the Brazilian beef imports and we don't have the Mexican cattle coming across the border. Having said that, as we've talked about before, Jesse, October is a tougher month typically, and that was when we made the high back in 2014. So nothing wrong with keeping your head up and keeping track of these charts and these technicals long term and the key trend lines on the monthly charts and saying to yourself, am I smart by not staying current on my marketings? Am I smart by not having any hedges in place if I lose some of these charts?
I'll leave it to you for final thoughts here. I'll let you take it whichever direction you want to go, Mike. Anything else you want to mention? Anything you want to reiterate to folks? I know we covered a lot here today on the show.
Yeah, one thing probably a lot of you are thinking about is the government shutdown. It's going to be hard to understand how the government shutdown moves the commodity markets. What I'm hoping is that because the dollar started weak in 2025, we've lost 10%. Still a lot of bears out there in the dollar market. I'm hoping that if this government shutdown continues and we lose data from USDA and the commodities lose their transparency on the supply demand fundamentals, we gain some of that in a continuation of a weak dollar trend, Jesse. So that's what I'll be looking for.
Mike, if folks want to reach out to you and have a conversation about the markets and their marketing plan there at Global Commodity Analytics, what's the best way?
Best way is go to the website, take a look at all we have. I got the brand new product services brochure up for 2026. Get a 2-week free trial at globalcomresearch.com.
That's globalcom with 2 M's, research.com with that. Mike Zuzolo, Global Commodity Analytics. Always great to have you join us here on Market Talk, brought to you by John Deere. Thanks so much. Have a good one. We'll talk to you next week.
Great to be with you, Jesse. Thanks so much, sir.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.